What's going on with Palantir Stock? As I'm talking, the stock is up 13% after hours, just reported earnings. This video is going to cover the highlights and some opinions of where I think the stock could go. In fact, Palantir Stock is now up 14.35%. It was pretty much flat going into earnings, so it's up about 15% year to date. Over the past year, the stock is up over 100%, basically 115%. Now, at first glance, you would expect a really strong beat to be at 14%, but the EPS actually 8 cents in line. And then the revenue, $608.35 million. That's up about 20% year over year, and it beat by $5.55 million. Now, this part is big. Commercial revenue grew 32% year over year and 13% quarter over quarter to $284 million. Of course, if you understand Palantir, commercial is where the growth is going to be. In the government space, Palantir is pretty established. In fact, the company's been around since May of 2003. So this company's over 20 years old. And artificial intelligence is the focus here, AIP. The customer count grew 35% year over year. Adjusted income from operations, $209 million. That's representing a margin of 34%. Cash and cash equivalents, $3.7 billion. That's very strong. And adjusted free cash flow, $305 million. That's a 50% margin. So on the 2024 outlook, U.S. commercial revenue has a growth rate of 40%. So you can see that this is accelerating, and most of this is going to be from AI. So this just came out. This is the annual letter from the CEO, Alexander Karp. And part of the reason the stock is so bullish after hours is because of this letter. It starts out and says, our expansion and growth as both a company and an organization has never been greater. Now it goes on to talk about $608 million, increase of 9%. That number isn't really all that mind-blowing, but it is accelerating back the other direction. And I think what it's telling you is that the next few quarters could be pretty good. And we talk in this channel quite a bit about how you have to drown the noise out, especially if you're a long-term investor, the analysts, news, CNBC headlines. It can be very overwhelming and confusing, especially for newer investors and really for investors who are thinking long-term. 6 hours ago, stay away, says Citi about Palantir stock ahead of earnings. So literally saying, stay away, get out of the stock. Here it is, up 14% after hours. Back to the CEO letter. Our results reflect both the strength of our software and the surging demand that we're seeing across industries and sectors for artificial intelligence platforms, including large language models that are capable of integrating with the tangle of existing technical infrastructure that organizations have been constructing for years. After nearly 2 decades of investment, and we talk about companies like CrowdStrike, built in the cloud, for the cloud, really built around AI since inception. This is another company that really has been built for AI since inception. So after nearly 2 decades of investment, we have positioned ourselves as a fundamentally new software business, and our results reflect this ongoing transformation. And you can see the nice ramp up. This is total revenue from 2019 to 2023. So very positive here. U.S. commercial business continues to be a significant driver of our growth, a trend that we expect to continue. And this, if you're looking for growth in Palantir, this is going to be the primary focus. U.S. commercial market, our revenue increased 70% year over year to $131 million in Q4 2023. That's from $77 million the year before, bringing our total U.S. commercial revenue in 2023 to $457 million. And a huge ramp up here. This is commercial revenue, U.S. commercial revenue from 2019 to 2023. That's where the growth is. AIP, Palantir's artificial intelligence platform, can now be up and running in as little as a few hours. For 2024, as a result of our sustained and growing profitability, we now see a path towards $800 million to $1 billion in adjusted free cash flow. We remain committed to building a business that will survive and thrive in any type of macroeconomic environment. As of the end of 2023, we maintained $3.7 billion in cash. We talked about that earlier. And going back to this article here on CNBC, Palantir has been rolling out its AIP, artificial intelligence platform. Karp said the company carried out nearly 600 pilots with the technology in 2023, up from fewer than 100 in 2022. That's exponential growth. This is huge right here. Last quarter, Palantir reported its 4th straight quarter of profitability. That means it's now eligible for inclusion in the S&P 500. Of course, if it gets included in the S&P 500, the stock is going to go higher. So in Q3, Palantir gave us a business update, and it said back then, AIP boot camps, 140 organizations by the end of November. Now, we're going to get an update on this probably in the earnings call, which is going to happen here shortly. The thing about this, if you understand sales cycles, so I used to work in software for about a decade, sales cycles take time. So if they're getting boot camps in November, here we are early February, you could see some pull through, especially the next couple quarters, the back half of 2024 and so on. In fact, here it is. I went and got this. I'm editing back into the video. 465 plus organizations participated in boot camps. This number is accelerating. You're going to see these sales cycles take some time. This is why the stock is up. Excitement about the future, especially around AI and AIP. I'm editing this video, updating this in. The deck just came out. Here are the 2023 Q4 highlights. You can read through this, pause if you'd like. This gives you a great snapshot of the earnings. You can see the stock's just crushing after hours, up 14%. Let's look at some metrics here. Then we're going to look at a chart, and then I'll give you my thoughts on the stock, where it might go. Now, looking at growth, this is not going to be updated. We were at 16%, now closer to 20%. And the expectation was basically that, around 20%. Now, Palantir is a software as a service company. And if you want to learn more about Palantir, we were the very first YouTube channel to cover Palantir. 6 months before they went public, they did a direct listing, not an IPO, but a direct listing back in 2020. And so there's several videos out there. I'll put some cards up at the end. You can go look. There's one video in particular that talks about AIP. And if you want to do some extra due diligence on Palantir, that'd be a great video to watch after this one. And if these types of videos are helpful, and if you're new here, make sure you subscribe to the channel and click that bell for notifications. So since this is a software as a service company, we generally like to look at specific metrics and their peers. So we can certainly look at things like PE ratio. It's good that it's profitable because a lot of SaaS businesses aren't profitable and don't have a PE ratio. But before this earnings, you had something like a 250, 247 PE forward, about 196. And I think if you adjusted that with tonight's earnings, it's going to be roughly in this area, maybe a little bit lower. Now, you can also look at things like price to sales. That's going to be a 17, and the forward's probably closer to 15. The metrics that we generally want to look at for cloud SaaS, software as a service, recurring revenue, the first one I like to look at is EV NCM revenue. Now, before tonight's earnings, it was traded at about 14.5x. So if you add 13, 14% to that, it's roughly 16 EV NCM revenue. So for comparison, Snowflake is around 20. You got CrowdStrike in the 18, 19s, Datadog's kind of up in those same areas. In fact, after the bump after earnings, you're going to have really 6 companies in the SaaS world that are going to be more expensive than Palantir. You're going to have Snowflake, CrowdStrike, Datadog, Cloudflare, MongoDB, and Zscaler. So Palantir is going to be next after those 6, and then GitLab's just right behind that. Now, you also want to look at Rule of 40. Palantir is roughly in that 40 range. You want it 40 or higher. If you look at the growth and that Rule of 40 to the EV NCM revenue, Palantir is expensive. It's a bit of a premium. A lot of people are excited about the future of the business, of course. And then you'll look at things like free cash flow, net dollar retention. The numbers overall are strong for Palantir, but just to give you an idea, a comparison to its peers. Look at the profitability. This is on Seeking Alpha, A-, and the gross profit margin, solid, almost 80%. And you can see some of the other metrics on your screen. One of the metrics we've been looking at recently, just because it's interesting, it doesn't mean you buy a stock off it or anything. It's just a tool in the tool belt or the toolbox. Net income per employee, about $38,600. So that's not bad considering a lot of these companies in the SaaS realm, they're burning cash still, and that's going to be a negative number. So next we're going to look at a chart, and then I'm going to give you some thoughts on where the stock might go. Anytime you see orange, that's a previous chart day. Yellow is today's chart day. There's not going to be any yellow. I'm just going to talk through it. Now, we do chart day every single Wednesday at 9 o'clock a.m. Eastern, Patreon Discord, and you can check that out. Join us. Those are recorded. We have a free trial going on right now. Visit patreon.com/firedupwealth. Now, last time we talked on chart day, this was a couple weeks ago, we said that we needed earnings February 5th. We said it could bottom anytime, but pressure under $18. And really, after earnings, depending on the results, you could see anything from $12 to $21. And so we kind of circled this as an area. If it does go down, it could be an opportunity to add. Of course, on the upside, $21 was what we projected as a possible upside target. And really, if you look at this R3 here, it's around $20. So $20 to $21 is where the stock could go in the short term. Of course, stocks can always go much higher, and they can fizzle out and sell off at any time too. If you look at this previous number up here, 2185, I think it's possible it kind of retests that area. It could see resistance there, but it could also blast through it. Now, Palantir is an interesting one because it is what we call a cult stock. There are a lot of retail investors. I'm a retail investor. You're probably a retail investor if you're watching this. There's a lot of excitement around the company, around the stock. And it's a lot like something like Tesla, where it can be very hard to predict because the stock just doesn't always behave like a normal stock might. And so if you get momentum behind a name like this, it could easily, climb to $25 or something like that. But you have to ask yourself, am I an investor long term? Am I trying to trade off momentum? What am I trying to accomplish by buying the stock? Generally at Fired Up Wealth, we're trying to buy stocks and hold them for 5 or more years unless the story changes. So do I want to buy the stock at $18, $19? I personally don't, because I've been following this company for many years, well before it went public. And it's one that I was buying at $9 and $6 and so on. So I think the stock could certainly go higher if you own it. I think it's a hold. As far as buying it here, if you're swing trading off momentum, you could ride some momentum higher. But a stock like this could fizzle out and go the other direction anytime. And if you really look at the fundamentals behind it and the growth and some of its peers, it is kind of expensive where it's at. But that doesn't mean that the stock can't go higher. If this video is helpful, drop me a like, drop me a comment. Thanks for your time and attention. Have a great rest of your day. Take care.